You stare at the screen, trying to feel out the market's next move. But trading on pure instinct isn't a strategy. When you place a trade without knowing exactly where the big players are positioned, you aren't trading alongside the institutions. You are providing the liquidity they need to fill their own orders. This trap is most lethal on the 1-minute chart. You see a sudden green candle spike upward, and FOMO takes over. You hit buy, convinced a breakout is happening. But buying simply because the price is moving, without knowing the institutional average price, places you in an unpredictable zone. You are flying blind. Algorithmic trading systems exploit this blindness. They generate rapid market noise, triggering retail stop losses and chopping accounts to pieces before the real move even begins. Operating without a central, volume-based anchor is just gambling. To survive, you have to stop guessing and start viewing the chart through the same mathematical lens as the institutions. That lens is the volume-weighted average price, or VWAP. It is the definitive line on your chart that separates retail chaos from institutional order. Today, we are going to build a mechanical rule base around this indicator. By the end of this, you will have a system designed to ensure you never take a trade against this institutional anchor again. Unlike standard indicators, VWAP calculates the true average price of an asset, weighted by the actual trading volume. It doesn't get tricked by low-volume spikes. It pulls the data back to where the real money is changing hands. Standard moving averages only look at closing prices. VWAP factors in the weight of those transactions. It reveals exactly where heavy institutional capital is positioned and the exact baseline they are actively defending. VWAP dictates your unbreakable daily bias. It provides the rigid framework required to stop acting as hunted liquidity and start acting as a strategic operator. Let's set up the system. Open your charting platform and add the VWAP indicator to your workspace. There is one setting you must verify. Set the anchor period to session. This ensures the indicator resets at the opening bell every single day, anchoring the data to the current session's active participants. Next, we establish our context timeframe. Set your primary chart to the 15-minute interval. This M15 chart will dictate your trading bias for the entire session. If the current price is trading above the VWAP line on the M15 chart, you have a long bias. You are only allowed to look for buying opportunities. If the price is trading below the VWAP line, you are strictly forbidden from clicking the buy button. In this red zone, you only look for shorts. Your personal opinion is irrelevant. The relationship between the price and the VWAP on the 15-minute chart is the only acceptable authority for determining the day's direction. Once your bias is locked in on the 15-minute chart, shift focus to your execution view, the 5-minute chart, shown here on the left. On this 5-minute chart, notice how the price pulls back to the VWAP line.
There is an absolute rule here. Never chase a price that is running away. You must wait for the price to return to this institutional magnet. But striking the VWAP line is not an automatic signal. When the price hits that level, you hold your fire. You are waiting for hard evidence that the institutions are stepping in to defend the level. That evidence comes through specific candlestick patterns. Look for a pin bar, a candle with a long wick that pierces the level and pulls back, or a strong engulfing candle forming precisely at the VWAP level. Your entry depends on the body close. You cannot enter while the candle is still forming. You must watch the countdown timer and wait for that 5-minute candle to officially close. If you use a blind limit order right on the VWAP line, you risk catching a falling knife. Without waiting for the close, the price may crash straight through the support level, triggering an immediate loss. Instead, follow the protocol. You wait for the price to drop, leave a long wick, and flow safely above the line. Only then do you execute the trade, placing your stop loss securely beneath that wick. The body close is paramount because it removes the guesswork. It is the market's final, undeniable vote confirming that institutional volume is actively defending that average price. However, the market doesn't always trend cleanly. VWAP is a powerful tool, but it is not a magic, impenetrable wall. You have to identify when the market is simply stagnating. We call this environment no man's land. This happens when the market loses momentum, moving sideways, while the price repeatedly crisscrosses a flat horizontal VWAP line. In a ranging market, the VWAP will generate continuous false signals. The price action will rapidly cross up and down, which will repeatedly chop you out of your positions. This is exactly why blind limit orders are so dangerous in this environment. If you try to catch every touch of the line without waiting for clear candle confirmation, a sideways market will drain your account. A mechanical system requires the discipline to sit on your hands. When you see the slope of the VWAP go completely flat, treat it as an absolute warning sign to stay away. Let's bring it all together. Your system rests on 3 pillars. First, the 15-minute context chart for the big picture. Second, the VWAP daily bias to dictate your direction. And third, the 5-minute execution trigger to time your entry. Looking back at our M5 execution chart, we can see the result of patience. The clean pin bar rejection right at the VWAP gives you a precise entry point, allowing you to ride the momentum safely. By following a rigid binary checklist, you replace mid-trade guessing and the urge to revenge trade with a repeatable process. Remember the stakes. If you do not know where that institutional anchor is at all times, you aren't trading. You are the liquidity being hunted by the algorithms. Set your charts, define your bias, wait for the body close, and execute your system with institutional discipline.